So normally when we see a run in gold prices, it's one of a couple things. It could be that people are concerned. They're worried about a bad turn coming, something that could happen. So they're running to a safe haven. I guess the other thing that it could be, though, is concern about Treasury yields and how low they've gotten at this point. Relatively speaking, maybe gold looks like a better place. What do you think's happening this time around?
I think it's certainly the case that the Federal Reserve has changed our outlook on interest rates considerably, and that certainly helps gold, because if interest rates are going to be lower for longer, including longer term rates if they end QT, then that's certainly going to help gold. But in addition, you have to look at the geopolitical landscape. Obviously, the outlook for a messy Brexit is increasing every day. Problems with China as far as trade policy don't help our economy. They certainly are helping gold, but you're right. I think there are plenty of headwinds for gold. Relative strength index, I'm not much of a technician, but relative strength index is one technical indicator I really like. It's 71. It says gold is convincingly overbought. And then if we do get some higher rates throughout the rest of the year, and it now looks like the Fed is going to talk about that, then that is going to be a problem for gold. And also the fact that that the dollar is near its 52-week high, not at it, but near it. That's also going to be a problem for gold.
So let me shrink down what you just said. Basically, some of the rally has been warranted. There are reasons for all of it, but maybe you think things have been a little overdone?
I think things have definitely been overdone. And again, the relative strength index indicates that. But also, if you look at the chart a little bit more for gold, you see that it's been in a nice upward channel since the end of September. And again, that all makes sense. Particularly in December. But we're now at the top of that trading channel. And if you wanted to sell it right here, I think that would make a fair amount of sense. I would not be long here unless I was really afraid of what was going to happen with Brexit. I think that's the only reason to be long gold right now. But all of the other fundamental factors indicate that it's come too far too fast, and it's had a nice run. It's probably time to take some profits if you are long.
$13.47 an ounce. What do you think a fair price is if this is too high?
Well, I think given where interest rates are right now and the outlook for interest rates throughout the rest of the year, I think 1,300 would make a lot of sense. I think that would be value. As a trader, I'd probably want to be buying it given the current situation below 1,250 on a trade, and I would like to be shorted here on a trade. And in fact, I am short gold futures here on a trade.
What about the dollar? I mean, it's been strong too. You think that trend's going to continue?
Listen, the ECB has said that they want the euro currency to be as weak as possible, and they're about ready to continue doing that. Actually, strengthen their efforts in that regard. The dollar obviously got sidetracked in its rally by what the Fed has done recently, but I think the dollar is going to do really well. Remember, the Federal Reserve is about 2 or 3 years ahead of, well, now probably more than that, ahead of the ECB when it comes to tightening. And so I think the dollar is going to continue to do well. You know, and again, head of the Cleveland Fed now is talking about maybe we do need one rate increase this year, and so that will certainly help the dollar.
Scott, how much of this, everything that you've just said, is predicated on getting a fairly dovish statement from the FOMC today? We know what they said at the time. I guess the questions that are still remaining that we'll maybe get some answers to at 2 o'clock today really have to do with the balance sheet and what they do with that.
Well, you know, I have talked about the balance sheet, and I've tweeted about it quite a bit. $4 trillion is about 5 times what it was 10 years ago. It should be higher now because of the difference in reserve requirements, but I still think $4 trillion is way too high. Fed sounds like they disagree. They're probably going to stop right about here. As far as dovish, we have to remember that the minutes are backward looking. I do think that they were right for the time. We saw all that volatility in December. But now you have to ask the question, if there's a Powell put, is there also a short call that the Fed is worried about? That is there an equity level that they don't want to see, a level from equity prices that they don't want to see, that is too high? And if that's the case, they may put the screws to equity traders right now. And I think that we're probably, given that we're up 10% on the year, I think we're probably right there.